Hi guys, it's Joe. Just wanted to elaborate on Chris's chart there. Firstly, I kind of like what you're trying to do there, and having a look at it myself, just wanted to add some more of a view to what I can see with regards to KAZ Minerals. So firstly, just to repeat what I said in the chat, the Fibonacci levels are drawn the wrong way round. So just as a key way of looking to do this in the future, you start at the highest point and end at the lowest point if you're looking for retracements high, and obviously if you're looking to go the opposite way, you start at the low point to the high point. So hopefully that makes sense. So I've started where I think you've started yours from, which was this high in April, and then gone down to these lows that you've used as well in August. I've also drawn another Fibonacci table from the highs here on the 26th of July, again down to these lows in September. So from what I can see in your chart, you've got that downtrend resistance which you've drawn, which I haven't done, so let me just add that on. So clearly that's going to act as a bit of resistance, and also what we've got is this 50% Fibonacci level, which is acting as a bit of resistance as well from these highs here to the lows. On a longer term view, a potential, or what looks to me like a double bottom has taken shape. So we've got a low there, and then we've broken up through the resistance there to confirm that double bottom pattern. We actually gapped higher on the move through, so that's quite a bullish signal as well. We haven't actually filled that gap. Typically gaps do get filled. It's not a hard and fast rule, but it's something that does generally happen, so I'll be looking for a pullback to there. We've also got this 38.2% Fibonacci level, which is supporting price. So yeah, I like the idea of buying a dip around here. When you're looking at double bottom patterns, you can actually measure the move of where you anticipate it's going to go, and you do that by using this here, which is a Fibonacci extension. You go from the low of the double bottom to the neckline of the double bottom, which is there, and then you go across, and that comes in around about 554. That also marries up with this unfilled gap, which was created here on the 2nd of August. We've also got a 78.6% Fibonacci level from these highs here to these lows, and on the larger Fibonacci table from April, we've got a 50% level coming in at 560. So we've got 3 or 4 different reasons why we could believe that it goes to this level. Of course, we've got to get through these resistance levels here, but buying around here with a stop loss somewhere around sort of 430 does make sense to me, and I think it looks like quite a good idea. So well played for picking that one out. Just with regards to mining stocks, obviously they are quite dependent on what goes on with the sterling dollar currency pair. If the dollar is stronger, then that is a good thing for mining stocks, because obviously these metals are pulled out of the ground and traded in dollars. So any dollar strength is typically good for mining stocks. So non-farm payrolls today, if we do see a push higher in the dollar, then that would be bullish for KAZ Minerals. Hope that helps, and I'll speak to you all soon. Cheers.